Hello, everyone. Welcome back to another video and another guest and a repeat guest. The very handsome and debonair Ashley Rich is back with us, our mortgage guru, to fill us in on the current market. Ashley has kindly jumped on pretty much every year since we started doing this, going all the way back to early post COVID. The last video maybe was a little bit more doom and gloom, Ashley. Hopefully, it's a little bit more upbeat today, although the
Try and keep
market's
it a
changed
little bit more
rapidly.
positive than last time. Yeah.
So welcome back. Always good to see you, mate. And of course, you are now working at a new firm, Yes Mortgages, I believe.
Yeah. Yes. Mortgage services, whole of broker market, none of the broker fees. So yeah, all good news there.
Fantastic. Good news. So where should we kick things off today then, James?
Well, I think, we've seen in the news in recent weeks and times that mortgage rates are
Mm.
starting to maybe come down a little bit. Can you tell us a bit how the market is appearing from your position?
Yeah. Well, I mean, it's at the moment it's very good. I I've seen an increase in the amount of purchase inquiries we're getting through, which is brilliant. Rates have come down an awful lot. So fixed rate products. I mean, just this month, we've had lenders reduce some of their rates by 0.7% or higher. So that's brilliant. The caveat with that, of course, is where they've come down in November, December, and January because of everything that's going on with import export, the fact that we've just, produced inflation, which is a bit higher than we wanted, what's going on with the, over in the Red Sea. That has had a knock-on effect to the swap rates, which is what affects fixed rate products. Um, and that's had an uplift of 0.25% since December. So we might have a bit of a kick up in rates, but the expectation is that they will come down again. And I think when you look at it over a longer stretch of time,
Yeah.
they'll zigzag. So down, up, down, up, down, up over hopefully all the way until 2025.
So do you think it's starting to stabilize a little bit more now in a range of maybe 4% or maybe even less than that?
Yeah, I think what we were looking at last year was an average of say between 4.8 and 5.6 for your standard residentials. Buy-to-lets were higher than that, obviously. Um, as time goes on, certainly at the moment, I'd say really you're looking between 4 and 5. So there's been quite a drop there.
Mm.
And we've even got some lenders at the moment that are offering rates below 4%. So yeah, very good.
Perfect.
Very, very happy broker this time.
Yeah.
I think probably people have adjusted to it as well. I think obviously after having such a very long period, years and years and years, these very low interest rates, obviously starting talking about these higher percentages has scared a lot of people. But I think as the longer time has gone on, and people have readjusted to that and just kind of not accepted it, but it's become more normal. Those 4 to 5%. Well, I'm on 4.7 at the moment. If I can get to 4.4 by the end of the year, 4.2, I'll be really happy. It means my mortgage is coming down. So yeah, I think any sign of a gradual decline, even if there is a little bump along the way, is got to be positive.
Yeah, it's fantastic. And I think I had when you look at all the reports, so Nationwide do an annual report every year, and they've put out that they don't think there's going to be a big increase in property value over the next 12 months. And initially, I thought that could be wrong because it's quite natural where rates have been so high recently. Um, there is obviously that's going to affect people, and people would have put off purchasing for 6, 8, 12, 18 months potentially. And so as the rates start to come down at the rate they have done recently, that's going to create that demand, which, as you all know, when the buyers flood the market, the house prices tend to go up. So I thought that's the way it might go. But as you pointed out, coming out of those really cheap rates, we still have them. So I think realistically, you'll have them probably until 2026. So there's still people out there. Unfortunately, I'm one of them. I paid 1.13%, and I've got that locked in until 2026. So I haven't felt any of this, and there's going to be loads of people out there that have done the same. So we'll see. I think it's going to be good. I think it's going to be a good year.
Fingers
Please let it
crossed.
be a good year. But
Stable year.
yeah, it'll be interesting.
I
Interesting to
think
see
I
what
think
happens.
from our perspective, we've seen there's been a bit more activity in
Mm.
the sales market. I do, it all depends on the type of property that you're dealing with, but there's been a bit more activity in what's going on there. I think prices are probably still, around the same as what they were last year. I don't think we're starting to see any uptick in that yet, but time will tell with that, I guess, won't it, as time goes on.
I think there was maybe a false rise in prices in 21 and early 22, which wasn't really normal. It's a big spike, obviously, when we had those low rates, people moving out of offices and moving areas and things, and kind of changed the market a little bit locally, I think. And I think we've had a big kind of readjustment last year. But I think people still want to buy. I think there's still the biggest driver for people is to get out of rented and to own homes, or to aspirational to move up homes. It's just, I think people have been scared at repayments and what if it's a never-ending upward cycle of 4%, 5%, 6%, 7%, and it's shown to be the opposite of that. It's kind of stabilized a bit more now.
I think it'll be really interesting to see where we're at. I don't want to wish the time away, but I think it'll be really interesting to see where we're at around sort of October this year. As I think if we do carry on the scale, again, it's just my opinion from what we're seeing, but the kind of 450, 500,000 pound plus properties are really quite sticky at the moment. People are struggling to shift them. And I think as we do take this sort of slow decline down, I think when that portion of the market really starts to get going, I think we'll all be happy again, hopefully.
Yeah. With just you mentioned it earlier about buy-to-let rates. What are the rates around for landlords at the moment, and how are they able to get the best deals? Because we're seeing that rents are continuing to be particularly expensive, and I know a lot of that has been driven by the increase in mortgage rates for landlords, as well as other costs and things as well. But how are rates for landlords at the moment?
We have seen some drops. This month actually with Birmingham Midshire. So BM Solutions dropped some of their rates, and they were pretty stagnant for quite a while. So that's good. Obviously, the mortgage work's been dropping some of their rates. In terms of getting the best rate from your lender, it really does come down to loan to value. There is a difference between if you want to borrow 75% or 60% of the property value. So I've just done a case recently where a client has reduced his loan to value from, I think, something around 70 right the way down to like 55, because the initial rate he was looking at was 6.14%. So when you think of the compounding effect in reverse, if he pays off £50,000 off of his buy-to-let mortgage, that's essentially, it's not a 6.14% return, but it's a 6.14% saving that he's got for the next 24 months. So he can always pull that back out later if he wanted to. So if you're trying to get the best rates, shop around, speak to a broker. Of course, had to get that in there. And have a look at where your money is and how hard it is working for you. That is the absolute key with everything at the moment. If you've got a pot of money sat there, not doing a lot, getting maybe 2.5%, 3%, why not look at overpaying it on your mortgage? Do you have any plans for that money? Have you still got emergency funds available? And that has really been the key, because landlords, I really do feel for landlords, and not many people will agree with me on that, but they make up such a large portion of the rental market, and through tax changes and having to purchase them limited companies and everything else that they've been through, the rates are higher than residential. At the moment, they're still quite a bit higher than residential. And for what the interest rate was 2-3 years ago versus what they are today, yes, rent has gone up, but nowhere near as much as their payments have.
No.
So when you think that the majority of the rental market, again, stats I pulled, I won't be able to name the source. I will find it if needed. When the private landlord owns 2 or 3 rental properties, and it's those people that make up the majority of private landlords who are getting impacted by this, still working, got dependents and credit cards and loans themselves, yeah, they're having a real tough time. So yeah, I'm hoping because we've got a Conservative government that are hopefully going to try and get themselves re-elected. They're going to do something quite fantastic in the March budget, which I'm hopeful for. But
They're
yeah,
going to have to bring a lot of gifts, I think.
sure,
If it benefits us.
yeah, yeah. I really hope they do. I read something that they were potentially looking to do something for first-time buyers. Um, so yeah, we'll see. Hopefully they come out with something good there.
So just something on a not a specific case, but something which we've come up against a couple of times or a few times, and we're about to start marketing a property where this is relevant, is that we've it's always been known that if a property is above a commercial unit, say a flats that might be above, or hair and nails, that kind of stuff, it makes it very difficult to mortgage. Now, Ashley, I want you to try and unpick some of the myths around that and maybe try and
Until we agree, no difficult questions.
Yes.
Sorry.
Okay, so flats above commercial premises, the general three things to look out for are there are a lot of lenders out there that will do it. There are loads of lenders out there that will do it, but the main three things that the surveyor who the lender sends will look for are smell, noise, and essentially like opening hours. So if you've got a cafe, for example, that shuts at 5 o'clock, the only two things there they'll probably be looking at is things like noise and smell. Does it produce a lot of smell? Could that affect the resaleability of the property? That kind of thing. There are a number of lenders that have a pre-underwriting department that you can actually refer a specific property to. So if you do have anyone, or you yourself are looking to purchase a flat that is above a commercial premises, you can normally actually refer it to your broker. Your broker will pass it on to the lender, and the lender will say, yes, this looks okay, but will be subject to valuer's comments, which is kind of the caveat they hide behind. But really, until they've seen the property, they're not going to know.
Okay, so I mean, with stuff like that, is that on the basis of a Rightmove listing or listing on an agent's website? Are they able to look at it from just as far as that, or do they need to physically go and have a look at it for pre-underwriting?
No. They can look at it from a distance. So I had a case last year where the house was a bit of an odd setup. You had a petrol station and then kind of like a car park that had a industrial warehouse where they were running a car wash, and then a house. And my client wanted to purchase this house. So there's two concerns there. One, they're right next to a car wash, but then just after that, it was a petrol station. And petrol stations are one of the hardest if you've got a house quite close to it. Obviously, something goes wrong, it can be quite destructive. And so what we did is we referred it to two lenders. Both were the first and the second rate. The lender that was coming up the cheapest had said, no, it's not one for us. We wouldn't want to do it. But the second lender said, we've got no issue with the petrol station, but it would be subject to valuer's comment. So what the valuer did was went round there and he opened the doors and windows and said, it does smell quite a bit. It's not one for us. We don't want to do it. So, yeah.
Okay. Yeah, it's interesting to notice that it can be.
It's nice that it can be on a case by case.
Yeah, exactly, and essentially at the whim of the valuer or surveyor or whoever that is sent around in relation to the bank. Are rates for those any different? Do they tend to be more money because of the greater risk, or is it with normal?
No, they don't tend to be any different at all. What with things like this, it's quite interesting actually. You brought that up. So criteria is a weird one, because if that lender just happens to be the best rate on the market that day and they would accept your circumstances, you get the best rate regardless.
Okay.
So it's only and as a broker, what you would do is you would get a case, you would start from the lowest cost to the client, and then essentially you work your way down. Once you've been doing it for a while, you sort of know, right, I know that lender won't do it, that one won't, but that one probably will. We'll double check, but that's where I think it's going to end up.
Yeah.
So criteria really is not black and white in terms of acceptance, but a lot of the basic, it doesn't affect the rates essentially. It's not like Halifax would say, because you're near a petrol station, we're going to charge you more. It will be this is our price. Yes, we will accept you, or no, we won't.
That's really interesting, and I think that helps debunk quite a lot of myths actually in relation to it, and actually might help and stuff that we can certainly advise going forward and pass that on to people. So I think actually,
I mean, if just to add on that, because I just thought I've left myself open there. There are lenders that, when it comes down to things like adverse credit, have tier systems. So you have like their prime rate, and then you have their near prime rate, and then you'll have their adverse rate. So for things like adverse credit history, yes, they do sometimes have higher rates depending on your situation. But for things like property, where it's located, that kind of thing, generally no. They have their rate, and it's either acceptable or not.
Yeah. And of course, the rate depends on how much they're putting down and how much they're taking out. So there's variables there as well. But there's no penalisation, if you like, because it's above commercial in terms of.
No. It's just a case of, if like if it's above a fast food takeaway, it might be that you get 8 lenders down the list, and then that lender will accept it. So have you paid a higher rate because of the situation? Technically, yes, but that lender's not going to specifically charge you more for it.
That makes sense. Yeah. Nice.
Well, Ashley, thank you very much. Great to catch up and find out a bit about
what's you guys
at the moment. And we really appreciate your time today. And we'll be in touch later on in the year, I'm sure.
I was going to say, should we pencil in October? We can see where those rates are.
Then you can see me, and I'm all down in the dumps again. Yeah, hopefully not.
My mortgage renewal is up in February next year, so October's about the right time to probably start talking about it. So let's
6 months. 6 months before your renewal date.
Yeah, 6 months.
That's because just to quickly add this on as well, that is what has been the saving grace for so many of my clients, is that they were due January, February, March, and where we started looking at rates in September, as the rates dropped, we just kept updating that product. And yeah, December and January have been a nice month because it's sort of £100, £80, £90, £104. So yeah, it's been great. Yeah, 6 months before.
6 months before, lock something in, and then you can always adjust it later. Because I think that's what I wasn't aware when we did this. We took a rate, thought that was our rate, and then we had a better rate 2 months later, which was 2 months before the actual product came into being. So yeah, you can always keep shopping around in that 6 month period. Brilliant.
Yeah, I want to say most lenders will allow you to change your rate later.
Yeah.
Some don't. Some will say we have to reassess you, and so on and so forth. But yeah. Just speak to a broker.
Yeah, good stuff. Speak to this broker.
yes, this guy.
Thanks.
He's got the best rates and 2 thumbs.
Thanks, Ashley.
Cheers, Ashley. Take care.
Take care, guys. Cheers.